Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to do an update, a little review here on lean hogs. It's not something that we usually talk about. It's not located in the main part of the matrix that we publish and update the three time frames. It's included down below in the extras, but the extra doesn't mean that it's a wasted market. Lean hogs is actually a pretty good market to follow. It's highly sensitive to energy builds, and we're going to talk about that. We're going to talk about how we use them. We're going to talk about the current combination of 89 minus 44 and 23. We have not only lean hogs, we have feed cattle, live cattle, lumber, heating oil. These are all things that are continuously tracked inside, at least in terms of a weekly energy build. And we're going to talk about how we use that within the primary trend. The primary trend for lean hogs, live cattle, and I think feed cattle are updated periodically, enough to keep an eye on it. And we do keep an eye on lean hogs in particular because it is a pretty well disciplined market to trade. So while we do that, you might want to click on this link here for 23, and you're going to get up the DI chart, and it's going to come up with a reading of 89 minus 44 and 23. I'm going to open up mine. Mine is a little bit more dynamic, and we're going to use that for this discussion to see how lean hogs moves through time, and how it moves and follows cycles and cycles of energy, and when it's a good time to buy, when the primary trend is up or down. The one thing we can see right away is that lean hogs is pretty much range bound, and not longer term, but this is shorter term. This is through about 2000. And you can see that the energy builds, these are bullish energy builds above here. These are bearish energy builds down here. We can see the turns, and you can start to visualize cycles. They go from up to down, then back to up, then to down and up. And now we're currently gone from a bullish energy build to a down. Now this coincides with the primary trend that's down, but it's if we take a look at it here, and the computer does update this fairly regularly, enough to know where the direction is, and the direction is down, but we're heading towards up. LTCO and LTRV are heading above the dotted line, which means then we're going to get another green box. The fact is that you have a primary trend flip that had a fairly sizable energy build. You could get a follow through, and I would say that the follow through would last as long as DI and DI2 don't get concentrated and get pulled down into this region here. Now that's something that was a pretty big drop from last week into this rally, but DI2 is still 23, and that would have to be way down here. Readings of minus 40, minus 50, and minus 60 are quite common in terms of a market that gets concentrated as it rallies. And then once you get a concentrated bearish energy build like these red arrows show, the markets tend to, and I have them, both of them marked, they tend to roll over, and then they roll over here. It's not always immediate, but usually the writing's on the wall because lean hogs tends to follow energy builds fairly closely. It's not immediate, but if you've have some profits after you bought an energy build and it's releasing, and then a bearish energy build and concentrated shows up, and you can see it inside the matrix, it's not a bad idea to start considering taking some money off the table. Now, when this primary trend, and there's people have their own ways of following the primary trend, turns up, you could get even more follow through, but then again, I would become cautious when these two readings fall below here. In terms of other things we can look at, and I don't usually do it unless we're in a report, we can take a look at how the size of different strength of the energy build. Let's take a look at the bullish energy builds, and we'll highlight them white, and then we mark them for participation only. You can see that the latest energy build, this one's a pretty big energy build. This one's a moderate. This was a pretty sharp one. This was a strong energy build over here. It did force a short-term rally, and in general, anytime you get a spike, you do see some sort of rally. Then lean hogs is a pretty volatile asset. It can break down, and you can see that the oscillations, they might be a little easier to see. You go up and then down, then up and then down, and then up and then down. But these represent how concentrated they are in the short term. Energy builds more like this, and they're more definable. There's ways to pare them down even further. You can see markets that are highly uncertain, and then they have a decent energy build within that. You can now see why lean hogs turned. This one's pretty high. This turned the market here. This turned the market here. These were energy builds that also turned the market, but they weren't quite as strong. This could have been maybe the third strongest energy build that we've seen since 2000, and it does give you a good idea why lean hogs has turned. But these are modifications we tend to make in reports, and we don't have a lean hogs report. I think the take-home message, if you're subscribing to the matrix, is watch the energy builds. When they get concentrated, both bullish and bearish, lean hogs tends to turn. Sometimes they get above 60, sometimes they get really close, and then they start to turn. All you want to know is whether or not you've been up in this area. DI is close to 60, DI2 is above 0, and then it starts to fade from there and it starts to rally. That's all it's needed to trigger a rally or to trigger a decline. Similar here, you can trigger a decline, but it didn't take long from this decline that set up right in this red dome that's above price to sell off and then to create a support cup. So we went from extreme concentration to extreme concentration within a relatively short span of time, probably within a month. That's because lean hogs is a pretty volatile asset, and it tends to behave according to the energy builds fairly reliably. So watch these close, and I'm going to head back into the matrix watch them close inside the matrix down in the extra columns. These are the columns that are way off to the side, and that's off by AC down in line 61, 62, 63. This is found in the trends tab of the matrix. This is something that lean hogs probably continues to release this energy build. It's probably because DI2 is 23 and not below 0. If it was below 0 with this type of reading, the rally would probably start to peter out in about a month's time. But this could last a little bit longer than people realize. But then again, when this creates a bearish energy build, be careful. It's time to take some money off the table, take some profits, or start thinking about something else because things are going to slow down. And since the lean hogs is extremely volatile, once the selling starts, it tends to move, and it tends to move quite a bit. If you have any questions, let us know. If not, now you know how to use the energy builds found in the lower parts of the matrix for lean hogs. If you're a subscriber to the matrix, you can use that. It isn't something we talk about too often, but these markets here are still tracked, and the energy builds are fairly reliable. If you have any questions, let us know. If not, thanks for watching, and we'll talk to you guys real soon.